Welcome to the deep dive. We're jumping straight in today, looking at Shivalik Bimetal Controls Ltd. We're using the source material you've shared, stuff like a Concall presentation, slides, financials, management commentary, the works.
Right, and the goal is to kind of unpack it all together.
Exactly. Pull out the key insights, maybe some surprising facts, all about their business, which is mainly shunt resistors, thermostatic bimetals, and electrical contacts. Let's dive in.
Yeah, what's good about using their own material is you see their story, how they frame things. It's like their perspective.
Totally. And it's quite a story. It goes way back. The presentation says 1984, founded as a private company.
Then public in '86. Pretty quick.
Yeah. And one of the first big things they highlight is setting up, apparently, the first plant in Asia just for thermostatic bimetals. That was October '86.
Wow, okay, so a big early bet on that core tech. And the presentation also mentions their R&D unit got government recognition later, 2002.
Right. Suggests R&D's been a thing for them for a while.
Seems like it.
And they didn't just stop there. The slides show strategic expansion. JVs, for instance. One with Chicon in the U.S. in '06 for silver contacts, another later for cladding material, and they set up a subsidiary too, Shivalik Bimetal Engineers, around FY0708.
So growing in different ways, not just organically, but also bringing in tech from outside. The presentation points to getting electron beam welding know-how in 2000.
EBW, right?
Yeah, and then equipment for cold bonding from Sandvik in 2011. So constantly adding advanced manufacturing pieces.
And that continues right up to today, looking at the material. They've just set up a subsidiary in Italy, Shivalik Bimetals Europe SRL. That was FY25.
Okay, so pushing into Europe directly now. Interesting.
Definitely says something about their global plans. And they're starting a pilot line for PCBA assemblies, printed circuit board assemblies.
Right.
They expect that to be running by FY26, which feels like a pretty big shift for a component maker.
It really does. Yeah, moving up the value chain, perhaps. We can get into that. But maybe first, let's just clarify what these main products actually are. What does the presentation say about thermostatic bimetals, shunts, and contacts?
Good idea.
Yeah.
Okay, thermostatic bimetals. The presentation explains they're basically metal strips designed to bend when they get hot, predictably bend.
Okay.
Use a good analogy. Think of two different metals stuck together that react differently to heat. One expands more, right? So the whole strip curves.
Ah, like a simple switch.
Exactly. It opens or closes a circuit. So perfect for, stopping things overheating or controlling temperature.
Like in an old iron, maybe.
Yeah.
Or a water heater thermostat.
Yeah, precisely. The presentation mentions the tech is high-pressure diffusion bonding, and applications are broad switchgear, appliances, cars, industrial stuff. They actually call it their legacy profit engine since 1984.
A long-standing core business, then. Yeah. And what makes them special here, according to the slides?
They talk about tech leadership, saying they have proprietary diffusion grades, which helps them get designed into products by the big OEMs.
Okay, so they have unique material science know-how.
Seems that way. They frame themselves as sort of a unique supplier in that specific niche.
Got it. And shunt resistors.
The presentation really stresses how critical these are for sensing current, especially in things like smart meters and, importantly, EVs.
Right. Electric vehicles need precise current measurement. And the key tech for shunts.
Electron beam welding, EBW.
Okay.
So shunts are like the sensitive measuring components for electricity flow, especially where it's high power or needs to be really accurate, like EV charging or tracking energy use.
Makes sense. And the third one, electrical contacts.
Yeah, the presentation calls these the essential touch points inside switches. The bits that actually connect or disconnect to turn things on or off, regulate the power flow.
Like the physical connection points.
Exactly. The points that touch for power, separate to stop it. Pretty straightforward concept.
And the manufacturing there involves brazing, welding, cladding.
Yep, those are the techniques mentioned. Applications are everywhere again. Light switches, circuit breakers, relays, smart meter parts, automotive stuff.
Okay, and their differentiator here, according to them.
They say it's offering end solutions, not just the tiny contact itself, but ready-to-use sub-assemblies built around it.
Ah, more value add. Okay. Now, this next bit in the presentation seems really key. Their unique tech and competitive advantages.
Totally. They talk up this dual process fortress idea, having both electron beam welding and diffusion bonding. The slides are pretty explicit. That combination is unique globally.
And they connect that directly to business advantages, right? Not just tech bragging.
Oh, yeah. They argue it gives them pricing power, specifically in shunts and bimetals. And they also claim it insulates them a bit from, say, euro-based inflation on materials and helps them avoid the long lead times competitors might struggle with.
That's a significant claim. Having both processes in-house gives them that flexibility and control.
What else stood out on the tech advantages front? Well, they mentioned building their EBW gear mostly in-house.
Why is that a big deal?
Lower upfront cost, basically. Because they have the IP and the know-how internally. Saves capital expenditure. Plus, their R&D has cooked up 77 different bimetal grades.
77? Wow. Compared to a global median of, what, 10, they said?
Exactly. So that depth in material science seems pretty important. Suggests they can really customize things.
Yeah, tailor solutions for very specific, complex needs. And they also state they're India's only EBW capability for strips, and one of just a few leading EB welders globally.
Right. And then there's this precision strip processing. They call it their metal quality controller.
Okay, what's that about?
It's about handling the thin metal inputs really precisely, ensuring conductivity is uniform, which means fewer failures, better yield, less scrap material, just tighter quality control on the raw materials.
Got it. Quality in, quality out. And that in-house machine building capability again, their capacity on demand workshop.
Yeah, that sounds like a huge operational plus. Own CNC tool room, automation skills. Means they can design and build their own EBW lines much faster than buying externally.
And the presentation links that directly to protecting profits, right? Safeguarding EBITDA margins.
Yep, because they can ramp up capacity fast when demand surges, instead of being stuck waiting for suppliers for ages.
That makes a lot of sense. Plus, they mention a relentless drive for automation to cut lead times and protect margins even more.
So it really feels like this deep integration, this specialized, almost proprietary tech setup, is their main competitive moat. Makes it tough for others to match them on cost, quality, and speed all at once.
Okay, strong tech base. How does that play out in the financials, especially looking at the FY25 and Q4 data in the presentation?
Well, the big picture financially looks pretty solid. The presentation highlights strong free cash flow, growth funded internally.
And zero debt, which they compare to a global median of 0.8x debt. That's quite something for a manufacturer.
It really is. Now, for the full year, FY25, the numbers show stable profitability overall. EBITDA margin was 22.28%. That's down just a tiny bit year on year, even though revenue actually dipped slightly.
Standalone revenue down 2.72% for the year.
Yeah, and profit after tax was down a bit more, 10.57%, ending at about 72.4 crores. So the paid margin dipped to 16.57%. Volumes overall were just marginally down, less than 0.5% for the year.
So a slight dip in top line and bottom line for the full year, but key profitability metric, EBITDA margin, held up quite well. What about the latest quarter, Q4 FY25?
That showed a stronger picture, according to the presentation. Standalone EBITDA actually jumped almost 25% year over year, came in at nearly 26.5 crores.
And they attributed that to?
Better gross profit performance and keeping a tighter lid on discretionary spending, basically.
Right, and that Q4 improvement boosted the EBITDA margin significantly.
Yeah, big time. Up 422 basis points year over year, hitting 23.17%. Gross profit in Q4 was also stable, up just over 1%, even with flat revenues and input costs. Volumes were down slightly in Q4, though, about 1%.
Okay, so Q4 looks like a nice rebound, particularly on the margin front. Did the presentation break down how the different product segments performed over the full year, FY25 versus FY24?
It did. And it's quite revealing. Shunt resistors are clearly flagged as the big growth driver. Volumes up over 6%, value up almost 4%.
That's strong, especially in a year where overall revenue dipped slightly.
Definitely. And the presentation notes shunts now make up roughly 49% of their total business value, which is pretty amazing considering they only launched them about 5 years ago.
Wow, nearly half the business already. What about the legacy product, thermostatic bimetals?
That showed some weakness. The presentation connects it to just general softness in the market. Volumes fell about 5%, and value dropped around 8% for the year.
Okay, so a bit of a headwind there.
Yeah, but even with that decline, bimetals still accounted for over half their total volume in FY25, so still very significant on a quantity basis.
Right. The presentation also mentioned working capital, didn't it? Inventory days went up.
Yeah, inventory days increased by 4 days to 184, and net working capital days edged up 3 days to 217 for FY25.
184 days of inventory? That sounds high.
It does on the surface, but the presentation offers an explanation. They say their zero debt, net cash position lets them strategically stock up on inventory when it makes sense.
Ah, so it's a deliberate choice.
That's how they frame it. Not in efficiency, but using their balance sheet strength to ensure they can always deliver to customers, kind of buffering against supply chain wobbles.
Okay, turning a potential negative into a positive, leveraging financial strength for operational reliability. That makes sense. What about their market position? The presentation claimed double-digit market share.
Yeah, double-digit global and domestic share in both shunts and bimetals. That's what they state.
And really sticky customer relationships.
Very much so. The presentation talks about pricing power, yes, but also relationships going back over 20 years. They even put a number on it. Average customer lock-in program life, 15 plus years.
15 plus years on average. That's deep integration.
And here's a really interesting point they make. Their component, while critical, isn't usually a major part of the customer's total bill of materials cost.
Ah, so the cost of their part in the final product is relatively small.
Exactly, which leads to what they call a negligible switch incentive. Even if their price nudges up, it's just not worth the hassle and cost for the customer to re-qualify a new supplier for such a critical designed-in part.
Right. The switching costs are incredibly high, especially for something that has to work reliably. Their technical expertise creates that stickiness.
Absolutely. Which leads us nicely into the future outlook. What growth drivers does the presentation spotlight? They talk about several big multi-decade trends providing a, quote, durable tailwind.
Okay, what are the big ones?
EV shunt market is huge. Smart meters, GIS export boom, that's gas-insulated switchgear, energy storage, data centers, and just the broad trend of electrification.
Right. For EVs, they actually quantify the opportunity, don't they? Saying the addressable market for shunts is 3x bigger than for traditional combustion engine cars.
Yeah. And that EV shunt market itself is forecast to grow significantly, maybe $3 billion now to over $4 billion by 2029. Plus, the overall EV market growth is just massive.
So the need for really good current sensing in EV batteries, charging systems, it's a massive tailwind for shunts.
No doubt. Then smart meters. India's aiming for 250 million meters installed pretty soon, right?
Yeah, 2025, 2027 is the target window mentioned, and that market's expected to nearly triple globally by 2031. Shunts are essential there for accurate energy measurement, cutting grid losses.
The GIS export boom tied to modernizing electrical grids, making them smarter, more resilient. That's a $32 billion market by 2030, they say, growing over 10% a year. And SBCL is qualified with the big global OEMs.
Okay, so grid upgrades are driving demand for bimetals and switchgear, and they connect that to AI integration, smart cities, climate resilience. Lots of drivers.
And the newer areas, too. Energy storage, big batteries need current sensors. That's a natural fit for shunts. Data centers, the AI boom needs huge power infrastructure, driving demand for both bimetals for thermal safety and shunts for power monitoring.
It really feels like they see all these massive trends: EVs, smart grids, GIS, storage, data centers, general electrification, all converging.
Yeah, the presentation sums it up as visible growing top line through FY30 plus. Pretty confident outlook. They also nod to helpful policies, the U.S. Inflation Reduction Act, EU Green Deal, India's RDSS scheme for power distribution.
And management lays out specific strategic pillars for growth in the presentation too, right?
They do. One is new product verticals, like those PCBA assemblies we talked about, using their core tech, like EBW, to move into more complex products. Diversify revenue, maybe boost margins, deepen the moat. Fits with Make in India, too.
Makes sense. What else?
Geographic expansion, building direct presence in North America, Western Europe, aiming for decent market share in specific niches, setting up local fulfillment. That new Italian subsidiary fits right in here.
Right. Closer to customers, less currency risk.
Then strategic partnership, though, easier. Working with customers or other specialists to co-develop assemblies. Speeds up learning, locks in demand.
And finally, backward integration.
Yeah, into raw materials tooling, aiming for better quality control, better working capital management, better cash flow, protecting those gross margins.
So a clear strategy building on their strengths, targeting those big trends. What about their actual factories? The presentation details their footprint.
Yep. Main locations are in Solan, Himachal Pradesh. Plant 1 and 2 are there, plus a third plant, CCPO Plant 3, which is meant to be functional very soon, July 2025. They also have the ICS JV plant in Indore, and the corporate office is in New Delhi.
And they make a big claim about Plant 1 in Solan.
They do. World's largest capacity in production of strip electronic beam welding. Big claim.
And they've put money behind capacity expansion. INR 100 crores spent between FY21-24.
Yeah, with another 15-20 crores planned for FY25-27, mostly for optimization. And they project a potential sales capacity post-expansion of INR 1,600 crores.
Wow, 1,600 crores. That's significant headroom compared to their current revenue. Shows the scale they're building for.
Absolutely. And the whole manufacturing process is really integrated. They do their own stamping, R&D, reliability testing, tooling, design. It's all in-house.
The presentation also briefly mentions ESG and talent.
It does. They highlight verified ESG credentials, suggesting this could help with funding, maybe lower capital costs. They also think their social impact work, plus the high-tech manufacturing, helps attract good engineers.
Which fuels innovation and growth. Makes sense.
And a specific environmental point, they make major use of hydroelectric power, leading to zero Scope 2 emissions, they claim. That's a strong sustainability point.
Definitely. Now, one recent challenge they addressed directly in the presentation is the new U.S. tariff that hit in April-May 2025.
Right, a new 10% duty. How do they frame the impact?
They say it's limited, only affects about 5% of their total group revenue, specifically some bimetal exports to the U.S. Crucially, they state 74% of their U.S. shipments, the shunt resistors, are not affected, still duty-free.
Okay, so contained impact and mitigation.
They say margins on over 80% of the affected contracts are protected by cost pass-through clauses, so they can pass the tariff cost on.
Okay, and that customer stickiness comes into play again.
Exactly. Because these are designed in parts, high requalification costs, the presentation indicates U.S. clients aren't planning to switch or cut orders just because of this tariff. They value the continuity.
Right, and their competitors face the same duty anyway.
That's the argument. It's a level playing field, so their competitive position in the U.S. doesn't really change. The management commentary, basically Sumer-Gummon's view, is small slice affected, costs mostly passed on, customer sticking, minimal impact expected on FY26 growth. They seem pretty confident they can handle it.
Sounds like they've thought it through. Okay, nearly there. Let's quickly cover global reach based on the slides. They export to over 38 countries now.
And the mix has shifted more towards exports over time, from 52% in FY18 to 56% in FY25. Domestic share has correspondingly decreased.
And geographically, for FY25, how did the segments do? Bimetal saw some growth in the Americas, but India, their biggest bimetal market, was down. Europe and other Asian markets also saw declines in bimetals.
Right, reflecting that market softness they mentioned. But shunt resistors.
Different story. India was a huge growth driver for shunts, up over 31%. Other Asian markets, Europe also saw really strong growth. Americas grew too.
So, while bimetals hit some regional bumps in FY25, shunts were clearly powering growth across multiple geographies.
Definitely. And just finally, the presentation touches on management acknowledges next-gen leadership with Kabir and Sumer-Gummonn and emphasizes operational discipline, maintaining all those certifications.
IATF 16949 for automotive, ISO for quality, safety, environment.
Right. And they really connect those in-house capabilities, machine building, the automation, to being resilient, shielded from Capex inflation, macro issues. It reinforces how central that operational control is.
Yeah, absolutely.
So wrapping up this deep dive based on the material you shared, what we've seen is a company with a really long history built on very specific, deep technical skills, proprietary processes like EBW and diffusion bonding that they say are globally unique.
Yeah, combined with remarkably stable financials, zero debts, self-funded growth, and those super sticky customer relationships because their parts are designed in high switching costs.
And they're clearly targeting multiple huge growth areas linked to electrification, EVs, smart grids. They seem operational disciplined and, based on this presentation at least, pretty confident navigating challenges like those U.S. tariffs.
Seeing it all laid out in their own words, you get a really clear sense of their strategy and how they view their strengths and opportunities.
Okay, so here's a final thought to leave you with. Given Shivalik's deep expertise in these fundamental components and materials and their explicit move towards integrating them into higher-level things like those PCBA boards, how might that unique blend of material science and advanced manufacturing let them potentially disrupt or, significantly shape value chains in some of these emerging tech sectors? Could they do things a standard component supplier just couldn't? Something to chew on.